Hello, you're welcome to Fininvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 20 years. In actual sense, investing is not very difficult. It's not very difficult in the sense that analyzing companies is not rocket science. It's something everybody can learn. If I could learn along the line, you also should be able to learn the process of analyzing a company by looking into the companies and financial statements, which comprises the income statements, the balance sheet, as well as the cash flow statements. In the course of this video, I would like to analyze the financials of this company, Beta Glass Plc. Beta Glass is a company that is into the manufacturing, the production of bottles and glasswares for the food industry, for the beverage industry. Essentially, they manufacture bottles for the beverage industries. So we want to undertake analysis of this company to determine its suitability for investment purpose. We want to consider the revenue of this company, the sales, the turnover, and as is indicated in the table here, we discover that the company made a turnover of 149.123 billion naira in the year 2025, as against 117.580 billion naira in the year 2024. This particular result is the full year result of the company that was released, I think, either yesterday or thereabout, either yesterday or today. Should be yesterday, if I'm not mistaken. So this is the turnover, approximately 118 billion as against 149 billion. That is what the company recorded in turnover. You could acknowledge the increase in turnover here. Then for the gross profit, the company made 30.758 billion naira in the year 2024, as against 52.664 billion naira in the year 2025, and that was last year. You could see the increment from approximately 31 billion to 53 billion naira. We always value the increment. That's where the secret of growth in investing lies. Not just the figure, but increment as against the previous year. Now we also consider the operating profits. The operating profit here is 74.022 billion. Sorry, 47.022 billion as against 23.556 billion. So there was an increment from 23.556 billion to 47.022 billion naira. We now come to the profit after tax, as profit after normal taxation. Then as at the year 2024, the figure was on 13.627 billion, 13.627 billion, as against 33.459 billion naira. Imagine the amount of money the government is deducting as tax. By the time you subtract, approximately 51 minus 33, you're talking about close to around 20,000 or slightly less than that goes to the government as tax. So the government is really taxing these companies a lot. So for the total comprehensive income, the same thing as the figure above, at the 3.5 6.459 billion as against 13.627 billion naira. That is the total comprehensive income. And then we now move down to the most important figure, the most important aspect of the entire analysis. It's nothing but this smaller figure you are seeing, so, and it is called the earnings per share. The earnings per share. So the year 2024, the earning per share was 22 naira 71 kobo, and it more than doubled to 55 naira 77 kobo. This is what usually gives me joy each time I see an earning per share of the company either doubled or more than doubled. That is, it has gone 100% or more than 100%. I am kind of rest assured that that company is a candidate for investment, and all things being equal, the company price would, if it doesn't really double, it will go by at least 50% in the coming 9 to 12 months, if it maintains this particular tempo, if it maintains this growth in earnings, growth in sales and profit and turnover, quarter in, quarter out, in the subsequent quarters, or in the or in the future, then of course the company share price will move alongside the growth trajectory of the earning per shares. And this is what governs the amount of dividend paid out. Dividends are paid out of the earning per share. The higher the earning per shares, the higher the dividends, and the higher the earning per share growth, the higher the share price of the company. This is the most important figure in the whole analysis here. Now, this is the income statements of our analysis. We want to look at the other segments, the cash flow section, as well as the balance sheet. The company price here is the share price is 420 naira. I remember about 2 years back, I bought this company at around 60 naira, and I sold eventually. And look at the price now, 60 compared to the company has gone beyond 5 times. That is, as if you had 1 million naira in the company 2 years back, you'll be talking about 5 million naira, 5 million naira today, if not more than that. So investing is very, very interesting. I don't think of any profession that is as interesting as as investing. Maybe it's the highest calling of mankind. Is a personal opinion anyway. So the shares outstanding here is 60 million, 600 million approximately, 600 million. Usually, the lower the share outstanding, the better. All right, and the bigger the share outstanding, that wouldn't really augur well for the company. So that governs the performance of the company essentially. This is 600 million, shares outstanding, and the market capitalization is this times this. That will give you 252 billion naira. In other words, if you have this amount of money, you can buy the whole company, if possible. So this is the PE ratio. The PE ratio simply means the price of the company divided by the earning per share. The price here is 420. If we divide by 55, that will give you 7.53. So the PE ratio is okay. The company is cheap in the sense that this is a lower single digit number. All right. So we now go to the equity per share. So simply divide the equity by the number of shares outstanding, and that will give you 160.8. So you compare this to this. The company seems expensive, but not all that expensive. It's still, it's still a very good candidate for your portfolio. Now we look at the equity. The equity simply means the total assets of the company. Subtract the minus the total liabilities. So the asset minus liabilities will give you the equity. So the equity here is the company is sound in the sense that as much as it has as much as 96.48 billion naira in equity. It has a very strong balance sheet. Some companies have negative equity, but this one is positive, not only positive, but strongly positive, 96.47 billion naira. We now come to the cash. The cash here, as cash at hand, cash in the bank, fixed deposit is 19.73 billion naira. 19.73 billion naira. You look at it's a healthy cash position. 19.73 billion is healthy cash position. So the company is somewhat cash rich. So it can take care of contingency expenditure whenever it arises along the line. So having considered the analysis, having done the analysis so far, and all things being equal, I will recommend a buy. I will give a buy recommendation for this company, although the entire procedure is for educational purpose. But at the end of it all, we need to make a recommendation, and so I'm giving it a buy recommendation. In other words, all things being equal, if you buy into this company and you hold it for maybe 9 months, 12 months, 18 months, as the case may be, and if this performance continues the way it is, the company will likely to grow by at least 50%. If you invest ₦1 million, you are likely to get at least 500,000 naira in the next 9, 12, or 18 months, if and only if the company continues to perform at this tempo. If nothing happens along the line that causes a dwindling in earning per share, this particular company will do very, very well. Please subscribe to this channel, like this video, and share this with people in your community, because my heart desire is to reach out to as much as 1 million Nigerians with this particular message about the wealth creation potential that is inherent in the Nigerian stock market. So I'm depending on you to help me achieve this particular goal.